Good morning, good afternoon, and good evening. I am Emma Joyce, Head of Community at Global Digital Finance, and it's my pleasure to welcome you to this Global Leaders Town Hall in partnership with the Global Blockchain Business Council, with special guest NCUA Chairman Rodney Hood. Jeff Bandman, GDF board member, is today hosting today's town hall. Jeff is widely recognized as a thought leader, speaker, and educator on blockchain and crypto asset law, regulation, and policy. He is co-founder and board member of Global Digital Finance and leads our regulatory engagement globally. Jeff was formerly a senior official at the US Commodity Futures Trading Commission, where he was responsible for design and launch of Lab CFTC, the CFTC's innovation hub and the first established by a US market regulator. President Donald Trump nominated Rodney E. Hood for the NCUA board on January 19, 2019. The US Senate confirmed him on March 14, 2019, and he took the oath of office on April 8, 2019, and was designated as the 11th NCUA chairman by President Trump. As NCUA board chairman, Mr. Hood also serves as a voting member of the Financial Stability Oversight Council. He also represents the NCUA on the Federal Financial Institutions Examination Council and the Financial Banking Information Infrastructure Committee. Mr. Hood was previously nominated to the NCUA board by President George W. Bush and served from November 2005 until August 2009. He was appointed vice chairman by then NCUA board chairman Joanne Johnson, and he served as the NCUA's representative on the board of directors of NeighborWorks America. Immediately prior to rejoining the NCUA board, Mr. Hood served as the corporate responsibility manager for JP Morgan Chase, managing national partnerships with non-profit organizations, promoting financial inclusion and shared prosperity in underserved communities throughout the United States. His previous experience includes serving as Associate Administrator of the Rural Housing Service at the U.S. Department of Agriculture. In this position, he worked to address the housing needs in rural communities and helped administer the agency's $43 billion mortgage portfolio. Prior to his public service, Mr. Hood served as the Marketing Director and Group Sales Manager for North Carolina Mutual Life Insurance Company, National Director of the Emerging Markets Group for Wells Fargo Home Mortgage, and served on the board of the Wells Fargo Housing Foundation. In addition to his public and private sector work service, Mr. Hood has served as a member of the Board of Governors for the University of North Carolina College System. Mr. Hood holds a bachelor's degree in business, communications, and political science from the University of North Carolina at Chapel Hill. It's my pleasure to now hand over to Jeff Bandman and Chairman Hood.
Wonderful. Thanks a lot, Emma. And Chairman Hood, thank you very much for joining us. We're thrilled to have you with us today.
Thank you, and I'm delighted to be with you. And Jeff, you and I have worked together since your days at the CFTC well over a decade ago. So let's dispense with the formality for now. And Rodney is fine, especially for a dear old friend such as yourself. And I'm delighted to be with you all.
Yeah, great, great, Rodney. And such a shame we can't be together in person. But we really thrilled to do this through the wonderful technology. Let's start. People are sometimes unaware of the scope of responsibilities that the National Credit Union Administration has. Could you tell us a bit about the NCUA, what it does, what its mission is?
Yes, Jeff, and what a great way to start today's dialogue. The National Credit Union Administration was created in 1970, so we've just celebrated our 50th anniversary as the primary regulator and insurer for the nation's credit union system. Our agency now serves some 5,164 credit unions, which has members now that total 122 million. So roughly 1/3 of American households have a credit union account. With that being said, assets are continuing to grow. We now have assets that are approximately at $1.75 trillion. So my role as chairman of the National Credit Union Administration Board is to oversee both the safety and soundness of the credit union system, in addition to making sure that we have a very strong insurance fund. So we also serve as the insurer. Just like our counterparts at the FDIC, the Federal Deposit Insurance Corporation, we at NCUA insure our member deposits up to $250,000 per account. We have a team of about 1,150 employees that are spread throughout the United States. As we as a nation and we as a world, as we deal with the global pandemic, we, for the first time in our agency's history, are now all working remotely. So you're catching me now from my home office as opposed to being in our agency's headquarters, which, again, I remember when you visited with me there a few months ago where we were talking about fintech and things of that nature. As I just round out what the NCUA is doing, I'd like for today's listeners and any of your other folks who will be joining us later, for you all to know that the credit unions grew during the Great Depression. They came out of necessity when individuals, hardworking people who were working at manufacturing plants and automotive facilities, they could not receive traditional bank financing at their local bank. So what did these hardworking men and women do? They collectively marshaled their resources together to create the system of cooperative credit that we now have today. So now for nearly a century, we've had a system of cooperative credit in the United States. It grew out of adversity. And they today have made people helping people their primary responsibility. That means credit unions tend to have a penchant for helping underserved, vulnerable, and marginalized communities. And that shares with my mission as well. So I hope that's a bit of an overview of the agency and the industry.
Yeah, that's so fascinating. And remember when we got together previously, and I had just not fully appreciated just how large the scope of the NCUA and its population. 122 million Americans, a third of our country. That's a tremendous footprint for an agency that a lot of people have frankly not really heard of or didn't really know what it did.
Well, that will change today as a result of today's podcast.
Absolutely, and it's fascinating the note of history that you added, how it sort of grew out of a previous financial crisis and kind of an almost distributed and decentralized way of a community, much the way that many of the kind of fintech now is driven. What have been your priorities since becoming chairman last year?
That's a really good question, Jeff. I would say I started on day one with priorities when I was sworn in. And then, of course, those priorities have somewhat shifted as we deal with the COVID-19 pandemic. First, I would say that my priorities have been to have a regulatory philosophy where my belief is that regulation needs to be effective and not excessive. And it's through that regulatory philosophy, Jeff, that I've been trying to not only look at safety and soundness of credit unions, but trying to remove a lot of their regulatory barriers that prevent them from serving a third of the American people. That means taking a conscientious review of our regs that may be outdated or outmoded. If credit unions are able to still keep their doors open safely, then I should be able to look at regulations that no longer apply to them. So I've been able to look at opportunities to provide them with relief. For instance, we've changed the requirement for having a residential appraisal from $250,000 to $400,000. That means that those credit unions can now make those types of mortgages available. So regulatory relief has been a priority. Another area has been really embracing 21st century tools. The reason I love what Global Digital Finance is doing is because it really relates to what I want to do around fintech and innovation. So really looking at how do we practice RegTech and SupTech and dispensing some of our duties as regulators. So looking at innovation, looking at how fintech can really be used to bring about more product development in our system. And I think another priority I would say has been looking at diversity, equity, and inclusion. I know we've seen a lot of unrest around the globe, as it were, and especially here in America. So how do we address some of those issues by making sure my agency has regulations and policies to help some of our minority depository institutions and also to really bring in diverse communities into the industry. So that's been a priority. But when I said that those were some of the main activities, I must say that the global pandemic has really, I wouldn't say interrupted some of those, but it's made me also look at what are we going to do now to make sure that we are coming forth with rules that will help endure the COVID-19. So that means, you all, that we as an agency are looking at giving credit unions guidance on how do they serve borrowers and their members who may need extra assistance with their loans and maybe restructurings and debt modifications and maybe even in some instances forgiveness. Are we giving credit unions the ability to look innovatively at capital levels, even though capital is really robust now? What are some of the tools that we're going to need to really work with them on? So I'm really having to look strategically at the COVID-19 and the impact that it's going to have on balance sheets of our credit unions. And with that being said, I have announced to the credit unions, and I want to announce to today's event with you all, I will not be introducing any new rules that affect credit unions during the pandemic, especially anything that could really add to their regulatory burden. So again, the main thing is not introducing any new burdensome rules during the pandemic. So that's one of the things that we're going to look at. And also, I'm going to try to hold on to that mantra even with the recovery period, which I hope will be sooner than later. So those are the priorities. So innovation, diversity, equity, and inclusion, reducing regulatory burden.
Boy, that's great, and that's big news. Thanks for announcing that today. No new rules during the pandemic. People have
that
so
add to burden, that add to regulatory burden. So if we're adding rules, it's because it's going to be a little bit more efficacious in helping the credit unions, again, with the tools they need to survive and help their member owners.
Got it. Well, there's so much I want to follow up in what you just talked about, the RegTech, the SoupTech, the inclusion, COVID, and hopefully we'll get to all of it. But, maybe just within the realm of kind of inclusion, earlier this summer, you'd written an editorial in the Wall Street Journal on how financial institutions can help America heal. It was a very timely and insightful piece. In your editorial, you wrote that since you've become chairman, much of your focus has been on building and reinforcing the places that have fallen behind, often in areas where, as you wrote, opportunity is limited, like hard-pressed urban neighborhoods and rural communities fighting decline. Can you tell us a bit about how that's been going and what you're seeing around that now?
Yeah, Jeff, that's a really timely question. And I don't need to announce to your audience that's joining us today is that sadly and lamentably, the tragic death of George Floyd has prompted conversations about race, diversity, equity, and inclusion, not just here in America, but throughout the globe, as it were. And the Wall Street Journal piece that I was able to pen, it talked about financial services and financial institutions coming together to help provide healing. I think as we look at our newscasts, as we see a lot of the disruptions out there with the protests, a lot of that stems from folks who for generations have never had access to financial capital and shared prosperity. And I think that if we look at things that credit unions and banks can all do in tandem, they, as I mentioned in the Wall Street Journal, can be a part of the healing process. I think that if we get it right, if we are able to use the tools of capitalism, the tools of access to credit, if we can provide those tools to underserved, vulnerable, and marginalized communities, that's how we can help break the cycle of debt and dependency, helping individuals obtain capital, and then giving them the tools and building blocks they need to provide sustainable home ownership for their families, the capital they need to spur entrepreneurship growth and create sustainable businesses that create jobs, and also the loans that they need to educate that next generation by sending them to college so they can have a brighter financial future through education. So those are the things that I'm thinking as I call individuals in the financial services community to step up and be a part of the solution. I know we look at the media and we read a lot of the social media postings and we hear a lot of noise, but no one is talking about concrete action steps. For me, I'm the first man of color to ever oversee a banking regulatory agency in the United States. And it's because of that that I feel that I have even an extra responsibility to look at these issues not as platitudes, but to look at these issues as ways that I can really show results. I've lived them. I know what it's like to be stopped repeatedly by the authorities. I know what it's like to be a man of color navigating in the world itself. But rather than use that to be negative, I think of it as an opportunity for me to have this wonderful platform, opportunities such as today to say, hey, let's let's marshal our resources. Let's again constructively look for ways that we can provide healing. And I think if we're going to do that, I think I would encourage some of our folks to ask themselves the questions as you're working in global digital finance, as you're working in financial services, are we looking at finance as a tool for good? When we're designing new products, are we looking at it through the lens of helping people who've never had access to tools such as affordable capital? Are we looking at ways that our products can be engineered to help people who've never heard of a FICO score or a credit score? Are we looking at opportunities to help rural communities? I think so many times we talk about urban areas that are marginalized and lack these tools. Similarly, we've seen similar trends in rural communities. So that's one of the things that I love about groups such as Global Digital Finance. You guys are looking at tools that can be used, whether it's urban, rural, whether it's a disabled or differently abled community, low to moderate income, LGBTQ+. There are a whole plethora of things that come through digital platforms. And again, that's why I certainly applaud the work that you all are doing. But again, all being a part of the solution.
Right. Right. And can you tell us about the work that the NCUA is doing with minority depository institutions, as well as institutions that serve some of these disabled or other communities you were just referring to?
You know, that's a really good question. Jeff, what NCUA is doing is we are putting our resource together to help those minority depositories. And for those who are wondering what is a minority depository, it is a bank or credit union that more than 50% of its members are minority. That's either African American or Hispanic or Asian or Native American. These are all institutions that have said, we are going to be financial first responders and bring capital to bring financial tools and services to communities where it's most needed. But recognizing that a lot of these institutions, though well-serving and well-meaning, they may not have a lot of the infrastructure to really effectively execute their core mission. So that's why we are investing in a lot of the MDIs. When I say investing, providing mentoring opportunities. Well, we may take a $5 million minority depository institution and match it with a $1 billion institution, where then that $1 billion institution is providing coaching on things such as Bank Secrecy Act compliance, liquidity management, how do we look at financial forecasting and things of that nature. We're also using grants to provide a lot of our MDIs with grants for them to get things around training on cybersecurity, to help with board development. So again, it's really using those resources. When I talk about financial institutions being a part of the healing process, oftentimes it is those minority depositories that are right there, as I said, financial first responders. Now, I certainly don't want to all imply that our larger institutions are not having that same penchant for helping underserved communities, but those institutions tend to be directly in those areas. I'll tell you a story. Right after I became chairman last April, perhaps one of the best examples of MDIs was when I had a chance to travel to a Native American reservation in Oklahoma. I was able to fly to Oklahoma in the middle of a hurricane and then drive 2 hours in flood conditions to visit the tribal land where they are putting a minority depository credit union. And can I tell you, the tribal leaders were elated, so elated in fact that they are providing this particular credit union with the capital it's going to need for 5 years so they can grow and serve a niche in that community. So NCUA is making new charters available. In addition to making new charters available, such as the new credit union in Oklahoma, we were also able to provide a charter for a rural community credit union in Maine. So we are making those tools available. We're also working in tandem with other groups that serve vulnerable communities. So we have low-income designated credit unions. So just as the MDIs are wanting to serve minority communities, we also have credit unions that have said they're only going to serve low to moderate income communities. And again, over 50% of their book of business would be to those underserved communities. And then we have another designation called Community Development Financial Institutions, CDFIs. So again, they're going to work on those economic development opportunities. So those are all of the credit unions that have different designations, but again, taking their tools to where it's needed most. And that's why during the pandemic, Jeff, I recognized that if I am going to put forward regulations and rules that are going to burden them, how are they going to be able to execute that mission, especially in the age of the COVID-19 pandemic? So that's why, again, no regulations that will prove burdensome, only those things that provide relief.
Yeah, that's amazing. I really, it's the first time I've heard that phrase, financial first responders, but it just makes so much sense, right? These people are on the front lines, and, kind of in terms of the philosophy you were describing earlier, what in practical terms can we do in the financial services industry and the financial system to rectify, some of these problems and challenges.
You're absolutely right, and especially, Jeff, because one of the things I didn't mention earlier about credit unions, I probably should back up and mention that we have credit unions that serve different sectors. So what I mean by that, I have credit unions that perhaps only serve the hotel industry, which, as we know, that since many of you and on this call, we're not traveling the way we once were. I'm not traveling 300,000 miles a year any longer. So that means that our hotel credit unions may need some extra assistance. It means that the airlines, a lot of our major airlines in the United States, guess what? They all have credit unions. So it means that we're having to really make sure that we are working with those members of credit unions during this difficult time. We have an oil and gas sector, so credit unions are all member-centric. If I didn't mention that, while all of your listeners will be able to join a credit union at some point, they just can't all join the same one. Some are based on community charters, some are based on colleges, some are based on faith-based. So again, of the 5,164 that exist, we can join one, just not all join the same one. So I just want you to know the membership opportunities are there. And that's something that really separates banks from credit unions. You just can't walk into the door of a credit union and open an account without making sure that you are a part of what we would call field of membership.
Yeah, makes sense. So those are based on various kind of affinities or categorizations, and
exactly
makes sense. But really, the fact that there's so many, a third of American households are in at least one of these is remarkable. So we spoke about fintech. When last time we got together in your offices, you referred to kind of some of your interests in fintech, regtech, soup tech. What are the key issues or kind of the main pain points that are facing credit unions where fintech or regtech can play a part? What sort of barrier, and are there barriers to the credit unions availing themselves of some of these tools?
I think some of the barriers would be lack of imagination, and I don't mean to be flippant when I say that. I think that some of the barriers have been, why would we need to embrace this new change when the existing business models work? But Jeff, what we're seeing now is that COVID-19 has catalyzed the need for greater innovation. So when I mentioned to some of my credit unions how I want them to be more engaged with innovation, I want them to embrace some of the disruptors and not think of what we're seeing come out of Silicon Valley as disrupting the credit union business model, but moreover, how can we use some of those tools around payment systems, around loan origination platforms, and even savings platforms on those PDAs? How do we use that strategically? That is an area that I'm emphasizing a lot of. I think that for me as the regulator, for me to go out and articulate these things, it's giving the credit unions permission to think outside the box. It's giving them carte blanche to look at tools and platforms that they can sort of deploy. Because as I mentioned, the great things that you're doing at Global Digital Finance, you're creating these tools that members and credit unions or banks alike can all deploy to really bring greater value. As we look at serving a third of the American community, a third of Americans are all used to using social media. They all are used to doing even the format that we're doing now with Zoom. So it makes good sense to think that we now need to make sure that we're able to offer a lot more tools through the platforms that we're using today. Like we're both doing this through our computers and iPhones or Androids. I don't want to give any particular endorsement. Any PDA, why don't we do it that way, Sandy? Then I'm not going to be in trouble with our ethics officials about giving an endorsement. But I want people to be more conscientious about helping underserved communities with digital platforms. And some of the things that happen is that we will see the tool, it's out there, and sometimes we have to go back and tweak it. Okay, well, I know that this was meant to be more for the affluent, or I think the term is mass affluent, but is there anything we could do to help this tool maybe make it possible for people who don't have income private banking network today, but how do we use it for them to use it to still score them? How do we create alternative scoring, or fair credit scores or FICO scores? How do we do some of these things? So again, FinTech can do that. I also would just note that as I'm asking credit unions to embrace technology, and many of them are. In fact, I was very pleased to know that many of our credit unions that had to go remote for the first few months of the pandemic, they did not miss a beat because they had invested in infrastructure. They'd already invested in some of these tools, and now it's bringing them forward. Just as I'm encouraging credit unions to embrace it, we are as well. In fact, we are coming out with our own digital platform at NCUA for using for exams. As I mentioned, the COVID pandemic has catalyzed the need for greater innovation in how we go about doing our business, both for the credit unions and for us as the regulator. So we're now able to do a virtual exam remotely. Well, I guess that's something that we are doing in the age of the pandemic, but post-pandemic, the tool that we have deployed is now going to allow our examiners to spend less time on site of the credit union and more time using the tools in the cloud, being able to look at projections and other things of that nature. So that's one example of how I think RedTech is going to help. Another area, if I could, is mention is that I intend to create an Office of Innovation and Access. And what we're hoping to do there is that every month, I hope to have a different social entrepreneur come to our headquarters and sort of test their wares with us. Let's do a regulatory sandbox of sorts to see. Let's test the product before it goes mainstream to see what would be some of the regulatory impediments so that we can help address those early on. And then we could also have that social entrepreneur just engage with our field staff, our examiners, our risk officials. And that's something that I think will also bring greater innovation to the market and greater scale. I talked early on about those minority depositories. I mentioned how many of them are indeed smaller. Well, FinTech, innovation, digital platforms, that can really help them with some of the costs. It can help them grow scale and things of that nature. So again, I am very bullish on the role that FinTech can play in helping our industry serve its members, but do so safely and soundly. And again, I look forward to inviting you all, and you especially, Jeff, over when we do launch the Office of Innovation and Access. And just to close, I'm being very emphatic about access being a part of the name. I'm not just innovating just because it's the cute, glamorous thing to do in today's society, is to all have social entrepreneurs and talk about innovation at virtual happy hours. I'm adding the innovation piece and access piece together because through innovation should come access to helping, again, marginalized communities having access to affordable financial services and shared prosperity.
Yeah, that sounds like an amazing program, and I certainly will look forward to being able to accept that invitation when we all get there. And it's so important, for the regulator to show, to have an open door to promoting, responsible innovation. And I think that sometimes the regulated firms, if they just assume that the regulator is going to say no or is not going to be open to it, they don't consider these things. And certainly, when we were working on the kind of design and launch of Lab CFTC and doing some of our kind of outreach and R&D to figure out, what it should do and how it should work, having that channel so that, regulated firms or firms that were considering entering the industry, or firms that were service providers to the industry, they want to be able to sort of go through that iterative conversation, to see, okay, would this work? Okay, what adjustments do I need to make, to make this a plausible thing? Yeah.
Exactly, Jeff. And I must applaud you because I would say that the foundation that you were able to lay during your time at CFTC is still bearing fruit today. Your efforts have now sort of catalyzed this whole new division. I've met the new head of the Office of Innovation there at CFTC. I've seen the work that they've been able to do, even with just, again, modernization. I would say that they have built a best-in-class program around innovation. In fact, I've enjoyed gleaning insight from some of the things they're doing. And what really helps me, because of your being a pioneer and the new leadership team that's at CFTC, it gives me confidence that we can really get this to work. And I'm probably one of the last financial regulators to create an Office of Innovation. So that means that I'm able to glean insight from CFTC, Office of the Comptroller of Currency, the Federal Deposit Insurance Corporation. So I'm able to really glean great insight and intel. But again, you laid such a great foundation when you were there.
Oh, thanks, Rodney. I appreciate that. Yeah, the team that's there now is doing great, and chairman's there's behind it as well, which is critical. But yeah, I think you have you have last mover advantage.
I do.
Or late move, not last, but yeah, I mean it's great. You're able to study the what's worked and figure out what suits you. But I mean just the kind of the energy and range of things that you're that you're talking about. The Office of Innovation Access. That you really are designing. It's innovation, but how to do it in a practical way, and how to do it in a practical way that helps the entities that you regulate is the challenge.
Mm-hmm. Exactly. And then you raised something else. It's going to be important that we look at what works and what doesn't work. And in many instances, I recognize that I could be a bit of an anomaly as a chairman of a regulatory agency that's encouraging people to take risk and learn. But I'm not telling them to be reckless. I'm telling them to really look at risk, but how do they mitigate the risk and things of that nature? Because I don't think they're used to anyone ever telling them it's all right to learn. It's all right to maybe make the mistake. And again, I'm going to really make sure that there's still guardrails around safety and soundness of our institutions and the insured share fund. But if we're not taking calculated risk, how are we going to be able to move the industry forward? And how are we going to be able to meet the demands of the third of American consumers who want access in real time?
Yeah.
And especially on payment systems.
Yeah, I'm sorry. And how are you, one of the kind of challenges for a regulator around, fintech and regtech can sometimes be, you have kind of the passion for it at the top. You've recognized a need or a potential benefit for it in the industry, but how do you kind of distribute that through the industry, through the regulator itself, through the 1,150 staff members at the NCUA? How do you kind of communicate, spread the word or the energy around fintech, especially in a distributed environment?
That's a really good question. And we do that a lot through communications. I am one that believes totally in the value of communication. So it's not just my issuing emails or letters to credit unions. I do a lot of webinars with our colleagues, and especially in the age of the COVID, since we all are working remotely, we're doing quarterly webinars. And almost every webinar that I mention, we're talking about innovation, we're talking about access. And again, because of this remote work posture, it's now crystal clear why we need to invest more in technology, because people are now recognizing, gee, we can get a lot of work done remotely. We can even get more work done remotely with some new tools. So I mentioned that new RegTech tool that we're going to be using. It's called the Merit System. It's the Measurement, Examination, and Risk Identification tool. It is the first tool that's been introduced in financial services regulation in about 30 years. A lot of us in the financial regulation, whether we be at the other bank entities or the credit union entity that I oversee, we're still using what I would call antiquated, outdated legacy systems that often don't speak to each other, that often are very burdensome and quite problematic at times. So this new approach that we've created, which is being tested now as we speak, it is already being, we use a mainline consulting company that has helped build it. I would say it's probably been one of the most expensive capital expenditures of probably the past decade at our agency, but well spent, because the virtual exam is going to give us metrics in real time. It's going to help us modernize the call report, which I'm sure all of your listeners and viewers know about the call reports. It's also going to allow us just to, when I mentioned some of the industry specifics, like we have oil and gas or the hotel or travel industry, we're going to be able to pinpoint areas of the country that we need to perhaps have a more targeted approach to looking at risk identification and how those risks that have been identified can be mitigated. So this new tool is going to use that. And again, the credit unions like it. It means that there's going to be less time that that examiner will spend on site. It means that a lot of that work can be done, and then you're just going to your credit union just for the exit interview and perhaps interviewing with the board and calling it a day. So again, but it's my way of saying to the industry, just as we're asking you to embrace technology, we too are doing something as well. It's called leading by example.
You know, regulators around the world, I think will be, I think are all, struggling with, the same challenges. They're working in a distributed environment. The regulated firms are working in them, and so what has been the, response so far in terms of your examiners themselves? Have they had a chance to sort of use the new tool and start to do this? Have they been responding positively to working with this?
Yes, it's been getting a positive response, and I'd like to think it remains positive even when I'm not around. So yes, I think the folks have really enjoyed it. And again, I have been able to test it. So I went to the consulting firm that developed it, and I was like a young kid in a candy store because I was so excited about the bells and whistles. And again, to think you've had a clunky, antiquated system for generations, and to now have this new streamlined, modernized tool that's only going to get better. The group has been really excited about it. And also, Jeff, we are testing it with the other industry folks. So I oversee the federal credit unions, but I also provide insurance to our state chartered credit unions. So that means that our other folks who care about safety and soundness are involved with this process as well. So we've been doing the beta testing with those individuals. I've also had some of my colleagues from the CFPB, the OCC, FDIC, and Federal Reserve. They've also had presentations on this new tool. And as I mentioned, we're the first to come up with the new examination system in probably 30, 40 years. So we want them to see if that's something that they would like to glean insight from as well. So while they all may have beaten me to the finish line when it comes to creating offices of innovation, I'm the one that's now leading with this new examination tool.
Yeah, it's phenomenal, Rodney. And one of the things that struck me as you were describing some of the benefits from it is it can give you this, much more of a, real-time dashboard that shows you, kind of where buildups of risk or flows of capital are going. And, I remember doing a visit up to, when I was working on Lab CFTC, doing a visit up to the MIT Digital Currency Initiative, and I was with somebody from the SEC and one of the bank regulators, and they asked us what we would think about getting information over blockchain, and sort of getting it intraday, for us and the SEC, we said, well, a lot of the information we get same day or T+1, but it seemed like what a lot of the information that the banking regulators were getting was at the end of the quarter, and then some period after that. So to sort of get, high quality information in a targeted way faster, it gives you tremendous insight and ability to, to manage and respond.
Jeff, I couldn't agree with you more. In fact, it's almost as if you were reading my mind with that. In fact, that's part of the reason as to why, again, I am just so sanguine about the role that this merit system is going to play. I mean, It doesn't help me at all to see what we did last quarter. Because think about it, by the time we get the quarter data and by the time it's scrubbed and analyzed, I mean, there are so many other areas that have already sort of deteriorated. So how do we meet those needs head on? So you're absolutely right. Looking at it in real time, getting the call report data in real time, those are the tools that we need. So again, identify the risk, mitigate it head on as opposed to waiting and looking at it in a rearview mirror. So we really applaud that. And again, modernizing the call report to that effect. We've done some of that real-time information now by working with some of our peers from the Federal Reserve. In fact, liquidity remains a vital part of the credit union system. Liquidity and capital, they're probably the two most important pillars of strength. So we're now able to get real-time information from our peers at the Federal Reserve on any of the liquidity that's coming in and out of credit unions. So those are the things that we're seeing, and I want to see even more of that.
Yeah, that's.
If I can go back to one thing, though, Jeff, that we haven't talked about, and that is while I talk about innovation and fintech, I'd be remiss if I didn't talk about, it does open up other areas that we need to be very vigilant about, and that is cybersecurity. That is an area that I would say is a major priority of mine. It's because the remote work posture, no matter what our industries are at the moment, it has made those folks who wish to do our system harm even more active than they've ever been, especially because we all are working home. Some of the networks may not be as secure as what we were having in our work sites themselves. So I remain vigilant about cybersecurity. In fact, I've appointed a new leader who is my senior advisor on cyber. So recognizing for your members that October is Cybersecurity Awareness Month. So we're going to be doing a whole routine of training sessions around cybersecurity. How do you harden your defense mechanisms? How do you practice good cyber hygiene? And that means for my institutions, whether you're a $3 million credit union in the basement of a church or a multi-billion-dollar credit union with a sprawling complex, how do we make sure that we're giving you the tools? How are we making sure that we're able to test and validate some of those tools? So cybersecurity is something I know that you all in your network care about. And it's just something that I want you all to know that as I bring on these other tools, I also am very cognizant that I need to make sure that we are hardening our defense mechanisms.
Yeah, that's great. Yeah, so it's so just more and more important, and yeah, the bad actors are constantly constantly innovating. Seem to say there. So we have a couple of questions from the audience coming in. I want to get to those in just a moment. I did want to come back to one of the other observations you made in your Wall Street Journal editorial, where you've said that financial inclusion is the civil rights issue of our time. What do you mean by that, and how does one work to address that?
Yes, and what I meant by that is that as we look at civil rights through the lens of the most recent march, in fact, when we think back to Martin Luther King's days, when he marched there in Washington, it was civil rights. It was around voting. It was around access and treatment of communities of color, notably more African Americans. Well, today, when we look at some of the data points, when we realize that today in a society, 40% of American households could not have access to $400 if there were a family emergency. If you overlay that with communities of color, if those are communities of color, that statistic goes to 60% of African American Hispanic households would not have access to $400 if there is an emergency. It would leave them vulnerable to having to run to pernicious payday lenders to get those needs met. So when I talk about financial inclusion as a civil rights issue, that is going to be financial inclusion is that equalizer. If we can democratize little d access to capital and credit to break the dependency of debt and usurious loans and from lenders who don't really care about individuals but only care about profit, if we can really provide those communities of color with affordable financial services, that's the civil rights issue, because it's going to really allow them to be a part of this great nation of ours. It's going to allow them to really be able to contribute, but to also to leave a legacy for their families. And again, a lot of the protests that we're seeing, I think, is from lack of access to affordable financial services. Now, there is some protest that we're seeing that's disruptive. Now, that I'm not condoning at all. But I think that a lot of the issues that we're seeing play out, it's because of this need for inclusion. And I think the George Floyd tragedy coupled with the COVID-19, which pretty much revealed you all that there's a disproportionate number of communities of color that have been impacted by COVID-19 than others. That could either be through health disparities or a whole litany of other things. So again, it goes back to financial inclusion, civil rights issues. And again, I don't say it's going to be a panacea, but I think it certainly will ameliorate some of those conditions. And again, I'm willing to work with the credit unions to give them the regulatory relief and flexibility that they need. The MDIs that I mentioned, those minority depositories, I am delighted to know that they right now have about $40 billion in assets. They're serving some 4 million members of that 122 million of the credit union. So there are some data points there. All the more reason why I really am asking them to really step up and do even more. but also encouraging the other credit unions as well. And if there's one message I want to add is that one needn't be a minority depository institution to help promote shared prosperity and financial inclusion. I think there's room for us all to play. And again, credit unions, from having grown out of the Great Depression, having evolved into this great ethos of people helping people, I think they can do it. And also, Jeff, I recognize that you and Emma represent a global organization. So a lot of the things that I'm talking about around financial inclusion in America, I think that those can be applied throughout the rest of the world. You talked about traveling. Of course, we have wonderful building societies, the term for credit unions in the United Kingdom. We have SACOs, the credit union community that's there in Africa. There are some really great cooperativas in Latin and South America. So while I am talking a lot about my experiences with regulation here in America, there is a worldwide system of cooperative credit. So I hope that your listeners who are joining from all over the world will recognize that this is not something that only can be deployed here in the States, but throughout the world at large.
That's very interesting. So the concept of a credit union, it's called something else in other jurisdictions, but it's kind of community-based finance exists in a lot of places.
Exactly, and helping the least among us in marginalized communities for the most part.
Yeah. So we have a couple of questions from the audience. Start with this first one here. Is access to financial services, including microfinance, the same as democratizing it? And does that address the more central or complicated issue of a financial system that's not providing equal social systems?
You know, that's a really good question. And yes, microfinance is what I would put under the name of that $400 loan that most people could not get today if they had an emergency and they'd have to go to, again, a pernicious payday lender. So microfinance is one of those tools. And again, credit unions, as you all know, they are not for profit. So not only are they not-for-profit cooperatives, that's why they're able to provide alternatives to payday loans. So that means that if you go to a credit union, we have them at different caps. So if you go to that local pawn shop or payday lender, that loan payment could be, I don't know, 600-700%. Credit unions are capped up to about 36% in the loans. Also with the credit unions, as they are democratizing, and again, it's providing fair access regardless of race, creed, or any of those activities. It's providing fair access at a good rate. What I like about the rules that we've made for credit unions to engage in what we call alternative payday loans or PALS loans is that you're also able to build credit. So that means that you get the loan, you've never been in the economic mainstream, you're getting a loan, you're going to be able to pay it off. And in so doing, you're building your credit score such that you can now have opportunities for credit cards. You can also have opportunities for financial coaching. I want to tell a story. There's a young lady who was a single mom. She had 2 children. She was making about $70,000 a year in Baltimore, Maryland, driving a bus. And she had only been to payday lenders, but when it was time to try to get her a loan, she never had a credit score. So she was able to partner with a credit union. So what did they do? They didn't just give her a loan. They also gave her financial coaching and counseling. I know we used to use the term globally as financial education. But teaching someone about a credit score, if you're not giving them the tools to improve it, doesn't do much to really assist them. She was able to have a financial coach. The way we all have coaches as we're doing our training sessions for health, she had a financial wellness coach that was able to help her go from not having a credit score to now having a credit score that's well over 700 in about 2 years. So she was able to now get a credit card, and I'm proud to say that she's on the path to home ownership. So that means that, and when I say home ownership, that means sustainable home ownership. She's going to get an affordable mortgage that she can afford. She's going to be able to build equity. I'm hoping that she's going to be able to have that as an opportunity to have a legacy for those 2 children someday. So again, that they can have generational access to wealth. So that's the democracy piece. That's the democratization piece of microfinance. And again, the credit unions, because they don't have the same profit thresholds that the banks have, they're able to do a lot of those a little bit more affordably. But you're right, there are other social issues that do need to be addressed. I know I'm cognizant of those social issues, and that was a really good question. One of the social things that I've done to address some of this is through my Second Chance initiative. Here in the United States, we have about 60 million individuals who were recently or may have been incarcerated for non-violent, non-criminal offenses. And what that means is when they now apply for jobs at certain institutions such as federal credit unions, because they have had that criminal offense, it could prevent them having a job. And I'm thinking, wait a minute, they paid their debt to society. Why are they still like Hester Prynne from the Scarlet Letter, still having to wear the Scarlet Letter when they want to apply for a position? So I have worked with my fellow board members to remove that barrier. If you've had non-violent, non-criminal offenses, you can now get a good paying job at a federally insured credit union that we oversee. So that means that people now, of the 60 million people, they can now have access to good paying positions with upward mobility. So that is one of the ways that that I personally am using and working with the industry to address some of these issues, because the question is right. It doesn't bode me well to talk about financial inclusion and access if we're not providing a pipeline for job opportunities for those same communities who've been marginalized and left vulnerable. So it goes both ways. So that's just one of the things that I can do as a regulator.
Yeah, and so it was previously a disqualifying element to getting a job at one of them, and that disqualifying element has now been adjusted.
Exactly.
No,
in fact, Jeff, and you've heard some industries call it banning the box, which means just not even have the individual check the box. So there are a number of terms that have been used, but you're right, it was immediately a disqualifying factor. And this came to my attention by someone in Florida. We'll call her Mary for short. And Mary had to take several buses every day to go to her job that wasn't paying really a good wage for her and her family, but she had to pass by one of the largest credit unions in her state as she had to go outside the neighborhood. So because of this rulemaking, she's now able to apply for a job and not have to take 2 bus transfers to get to work every day. And I'd like to think that this would pay her a much better wage. So those are the types of ways that we can address some of the social inequities that exist through lack of employment opportunities. Because I do think the employment opportunities should be matched with providing microfinance.
That's great.
And traditional finance. The whole goal is to get them up the financial mainstream, to go from no credit score to a credit score to, again, mainline products that come with affordable rates.
Yeah, and it's, having this kind of, tangible benefits to people. So we have I think we have time for one more question, which says, we want the post-COVID world to address social inclusion, be environmentally sound, built on sustainable economic systems that put humans at the center. There are many goals for a complex and interconnected industry to address. Where in the value chain do we start? What are those first steps?
One of the first steps, I would say, is the fact that we're having this open communication about it to the way we are today. I've been in the industry now for almost 30 years of working in finance with some large entities. So have you, Jeff. And I don't know if you would agree, but in our American society, it has taken us 400 years to have these types of difficult conversations. Yes, we've talked about diversity, we've talked about equity, we've talked about inclusion, but in the wake of George Floyd, coupled with the COVID-19 pandemic and what it did to show the disproportionality of those communities of color that were impacted, it took these whole natural events to really create the dialogue that we're now having today. I think that's one of the things that I'm pleased to see, the dialogue. And I also am pleased to see that people are taking concrete results. I think because we're in this remote work posture, and by the way, there have been stories like this for years that have been going on for generations. But what has happened is that for the first time around the globe, because we were not all taking our long commutes to the office and doing all those other things, we were able to see a lot of these issues, sadly, play out and manifest themselves right before our very eyes. I, as a man of color, while I care about these issues, and I mentioned that a lot of the things that I do are not platitudes, but through my lived experience, I have never talked as openly about these issues than I have today. You've all in this call, on this podcast and webinar, you've all seen a number of other African-American leaders, all of CEOs of companies, board members were all talking about this. This typically would have been something that would have been a bit of a taboo to discuss openly, but now, because of what's going on, we're able to have the dialogue, and I want the dialogue to be met with action. the action that we're talking about is one, I was so proud of the media streaming service that was investing $100 million in minority institutions. I'm proud of the fact that that social media group or that streaming company invested $10 million in one of the credit unions that I oversee, one of the MDIs. So that means that they're going to have tools for cybersecurity and digital innovation. I'm seeing that now, for the first time ever, people are getting away from rhetoric and really going into action. So we're seeing those investments. We're seeing a lot of impact investing. In fact, credit unions, they don't really have access to secondary capital. Our low-income designated credit unions can use secondary capital or subordinated debt. So, but not all of them. But for those folks who want to invest in those institutions, they can have investments from some of the other banks and credit unions and things like that. So impact investing. I'm really pleased that one of our civil rights organizations has partnered with the New York Stock Exchange to have a new exchange traded fund where they are going to have this ETF comprised of companies that excel in diversity. That means that if you are on the NYSE and your company has certain thresholds that it is surpassed around diversity, equity, inclusion, it means, does it have a diverse board? Does it have diverse supply chains? Does it have diverse senior leaders? So once those companies have demonstrated a penchant and an ability to really do a great job, that means that they'll be a part of this ETF. And what happens? It means that some of those proceeds from the ETF will be able to go back into communities of color to help with the financial coaching and the financial health and well-being. So I'm pleased that we're seeing concrete examples. I'm pleased that it's resulting in action. Otherwise, we run the risk of just sort of, okay, let's just really get hyper emotional about it and move on to the next crisis. But this has remained in the American, I wouldn't say the American, I would say the global discussion and mindset for the past few months now. And I think we're going to continue to see action-oriented steps.
It's wonderful. Well, Rodney, on behalf of Global Digital Finance and Global Blockchain Business Council, we'd like to thank you very much for joining us today. This has been a great conversation. Good, there's so much to talk about here. Certainly look forward to continuing it, hopefully in person someday soon. But we really thank you very much. It's been great hearing from you today.
Well, thank you for having me, and I do look forward to staying in touch, and especially because of some of the tools that you all are deploying through Global Digital Finance around blockchain and technology. I want to touch base with you all to see what are some things that I can do to incorporate some of your key insights into my newly created Office of Innovation and Access. So I think that there's definitely work that we can all do. So I certainly am willing to get back together with you all and your members to continue this important dialogue. But until then, I just want to thank you for the opportunity for letting me talk about America's system of cooperative credit. I've enjoyed being the 11th chairman of the NCUA, and I look forward to working with you all in the days and years to come. So bless you all, and I hope you and your families all remain healthy and well.
Thank you so much.